Hello and welcome to Startup Street. I'm Arundhati Ramanan and with me is Shruti Mishra. These are the top headlines from the startup world.
The news, not always for the right reasons, but at least now there are right reasons for it to be in the news.
6 months after founder Ashnir Grover's exit from Bharat Pay, Chairman Rajneesh Kumar claims several steps have been taken to bolster corporate governance, says cash burn is down from $11 million to $2 million per month, expects Bharat Pay to be EBITDA positive in 3 months and go public in less than 2 years. That's an exclusive.
Byju's co-founder Divya Gokulnath says that the coverage of the edtech giant's financial results was sensationalized to focus only on the company's losses after it released its audited financials last week. Taking to LinkedIn, Gokulnath compared Byju's earnings, calling it a blockbuster-like Brahmastra.
Insurtech startup Zopper backed $75 million in a Series C funding round led by Creages. Round also saw participation from ICICI Venture, Bessemer Venture Partners and existing investor Bloom Ventures. The funds will be used to bolster its SaaS platform and data analytics capabilities, undertake inorganic growth and explore opportunities in the international market.
Fintech players should look at areas like green finance as well as the underserved demographic categories, says Finance Minister Nirmala Sitharaman. This while seeking more engagement between the government and the industry. This comes as the Reserve Bank of India has asked all digital lenders, including fintechs, banks and NBFCs, to comply with its norms by end of November.
Former Infosys director TV Mohandas Pai slams Oyo for allegedly misleading investors via fake accounting as the hospitality major reported EBITDA-level profitability of 10.6 crore rupees for the June quarter. In response, Oyo's CFO Abhishek Gupta said, and I quote, EBITDA is clearly reported and is higher at 10.57 crore rupees for Q1 FY23 than adjusted EBITDA of 7.26 crore rupees. Other income not included in EBITDA and adjusted EBITDA. All numbers are from audited signed financial statements. Global non-GAAP metrics are defined transparently. End of quote.
Uber asks its drivers in India to ensure backseat seatbelts in their vehicles are accessible to passengers, and they work days after Cyrus Mistry, the former chairman of India's Tata Sons, died in a crash. I quote, to avoid any fines or complaints by riders, please ensure the seatbelts on the back seats are accessible and functional. End of quote. Uber said in an advisory to its drivers, which was seen by Reuters.
In a first, Google CEO Sundar Pichai visited the Embassy of India in Washington, D.C. and held discussions with India's ambassador to the U.S., Taranjeet Singh Sandhu, on various aspects of the tech company's activities in the country, particularly its aggressive push towards digitization. This is for the first time that a top Indian-American tech CEO has visited the embassy in the U.S. capital.
Fintech startup Bharat Pay is in the midst of a transformation. The dust has settled after one of the biggest showdowns in the Indian startup ecosystem. Following its estranged founder Ashnir Grover's exit, the fintech unicorn has been now trying to begin a new chapter. It has appointed 2 new independent directors on the board, brought in a new CFO, hit an all-time high of $20 billion in annualized total payments value, and expanded its footprint to more than 400 towns and cities. And leading this change is its chairman Rajneesh Kumar, who joins me now to talk about the road ahead for Bharat Pay. Mr. Kumar, thank you very much for taking time out and joining us here. You know, 2 new independent directors, and no less than the former RBI Deputy Governor and Zomato's chairman as independent directors. With the kind of corporate governance issues that the company faced earlier, would you now say things are back on track for Bharat Pay?
Yeah, so in last couple of months, several steps have been taken by the company to improve its corporate governance. And that means that all the policies, they have been rewritten to comply with the laws. The other is about strengthening the management team and appointment of a full-time CFO and as well as the head of HR, who are very well-known professionals in the industry. That has been done. Appointment of an audit firm to do the internal audits. These were several steps, and Bharat Pay, it is a brand, and the company is Resilient Innovations Private Limited. So though it is a private limited company, but because the company has a plan to go public and eventually list, in that scenario it was thought that we should strengthen the board and we should have independent directors as per what is applicable to a listed entity. So it was in line with this thinking that appointment of 2 independent directors have happened. And I'm really thankful, in fact, that these 2 directors, they accepted our request and decided to join the board of Bharat Pay. And this is a very good signal from the company's profile, as well as like it was in the news, not always for the right reasons, but at least now there are right reasons for it to be.
Okay, let's also talk about the business of Bharat Pay then, because, you know, over 3,600 crores in total loans have been facilitated in the first quarter of this year. You recently hit that $20 billion in annualized TPVs. What is the business momentum looking like going ahead? And, you know, will you be able to surpass that $30 billion in payments by March 2023 target, for instance?
Right now, as I said, that there is a little bit of a strategic shift. So growth is under focus, no doubt about it. But the focus is more on earning the profits and improving the bottom line. And again, in last several months, the company has worked on its strategy to make it profitable. The cash burn, which used to be $11 million per month, it is now down to little above $2 million. So which is a big improvement. And within next 2 months, or at best in 3 months, we will be EBITDA positive. So which is a big achievement for the company. And once the issues around governance, they have been sorted out, the business strategy, there is a complete alignment amongst the investors and the management team. The management team has been strengthened. The feet on the street, the people who are managing this large network of merchants which has been created by Bharat Pay, there is a renewed focus on that. So there is absolutely no doubt that Bharat Pay will be profitable and Bharat Pay will be pursuing high growth opportunities which are available in the Indian market.
So let me again, ask you that for clarity. You said the focus is very much on profitability, and the company hopes to be EBITDA positive by when? Is the timeline that you're working with?
The target, internal target, of course, is we were hoping that it will be March 23, but the way numbers are turning out to be, it can be much earlier than that. So maybe by December 22, we should achieve our target 3 months ahead of what was planned for.
Wonderful. So by December, the company hopes to be in profits. But, that brings me to my next question. And that profitability was a key target for you to go ahead with your IPO plans. What is the update on that front? When do you plan to take Bharat Pay public? And what are the milestones, apart from this profitability, that you hope to achieve before Bharat Pay goes public?
Look, there is again a clarity on one thing, that there should be a consistent record of a few quarters as far as the growth and profit is concerned, so that it gives confidence to the investors that the company has a plan, it is working to a plan, and there is a potential for growth and profit both. So that confidence, at whatever stage we feel that the company can confidently go and tell the investing public that, look, this is how we are performing and what our plans are, and we will be able to achieve those plans. We would like to go to the market with that confidence, and depend upon market conditions, and there is a process to be followed about like filing the application and approvals. So no fixed time frame, but 18 to 24 months, that's what the investor and the board and the management team feels, that 18 to 24 months is the time period by which we can aim to list Bharat Pay.
All right, so BharatPe may go public in the next 18 to 24 months, says Chairman Rajneesh Kumar. Moving on, also on what's brewing, insurtech startup Zopper has raised $75 million in its Series C funding led by Kriegis, with participation from ICICI Venture and Bessemer Venture Partners. Now, existing investor Bloom Ventures also participated in the round. In fact, Tiber Global, according to the company, currently invested and will continue to extend its support for future growth. Now, Zopper claims this is one of the largest funding rounds in the insurtech space in Asia till date. And to talk about the road ahead at Zopper, joining me now is its co-founder and CEO, Surjendu Kuila. Surjendu, welcome to Startup Street. And before we get to the fundraise, let's understand what Zopper does. Now, Zopper brings partners and insurers together on a platform. Tell me how you're transforming and automating insurance distribution.
Thanks for having me on this panel. So what Zopper does is basically Zopper sits between insurance companies and large and small ecosystem partners. And when we talk about automation, we primarily talk about deep integration with various systems of ecosystem partners, because at the end of the day, we're talking about insurance, which is a very complicated sort of a policy offering. And unless and until you use technology to basically streamline this entire journey, distribution of insurance will always be broken. And the problem that we are solving today is basically to ensure that starting from policy issuance, basically to reporting, everything is part of a single platform. And that is the SaaS platform that we offer to multiple ecosystem partners.
All right. So, Surjendu, take me through your technology, your offerings. Tell me how Zopper is democratizing access to insurance distribution via your SaaS platform. Also, if you could share some use cases and the kind of efficiency Zopper brings in for the clients.
Sure. So if you look at, in insurance distribution, you would realize that is the biggest headache for any insurer, because a sizable portion of the revenue goes in, customer acquisition. And, what we have built is basically something that sits between insurance companies and ecosystem partners, right? And our offering enables these ecosystem partners to distribute various kinds of insurance products to their own captive customer base, right? See, at the end of the day, if you are a large organization and if you have a sizable number of customers, you are always looking at, additional revenue channel, right? And the best way to monetize your customer base is to distribute financial products. And if you look at, the slew of financial products that are available, insurance takes the pole position there. And if any ecosystem partner wants to distribute insurance, they need access to a platform which is a SaaS-based, API-led platform, which will enable them to distribute insurance to their customers. And that's exactly what we do. And as far as products are concerned, we are integrated with all the insurance companies in India and are able to offer, motor insurance products, health insurance products, life insurance products, and also a lot of affinity-based, assurance products.
Okay. All right. You plan to utilize the fresh funds to improve your technology as well as for inorganic growth through M&A. So, Surjendu, what is the kind of war chest you have today for inorganic growth? What companies are on your radar?
Yeah, we basically are looking at, acquisition from two lenses. Okay. One would be some technology company which can come in and bring in complementary skills, right? Because at the end of the day, if you look at insurance as a sector, there is not much of a technological evolution or technological interventions that have happened in this particular industry, as opposed to payments or lending or fintech, in general, right? So there is a lot of work that, players like us need to basically deliver so that we build this infrastructure on which distribution can happen automatically, right? So we are looking at technology companies who can come in and sort of bolster, our might. That's one. And second is we are also looking at, interesting, distribution partners who can come in and create very bespoke and customized products so that the margin expansion can happen for the organization.
So how soon will we hear of an acquisition?
We're looking a couple of quarters from here.
Okay. Okay. Yeah. So give me a sense of the business growth numbers. Where does the revenue stand currently? And I believe you're already profitable. Where do you go from here?
Yeah. So top line and bottom line, these are the two, important metrics of any business. And what we have believed is being an organization who has been around for almost 11 years now, we understood that unless and until you are building a fundamentally solid business, right? It is difficult for you to sustain. So today, we last financial year we closed 350 crores worth of gross written premium and a revenue of around 70 crores. This year we are targeting 1,000 crores of gross written premium and a revenue of around 200 crores.
Sure. Okay. One final question, and if you could quickly answer that, you aim to achieve an annualized gross written premium of $500 million by March 2024. What makes you bullish? Where do you see the next leg of growth coming from? In fact, you're eyeing international expansion. If you could also tell us what markets you're looking to expand in and what are the timelines?
At least for the next 18 months, we are not looking at international expansion. We are focusing primarily on the Indian markets. But a lot of our partners with whom we work today, they have global footprint. And they are sort of pushing us that if we can customize the solution for adoption of this product across certain other geographies that they operate. And we are looking at Southeast Asia and the GCC region, which is Middle East, primarily for that.
All right. So, Jendu, we've completely run out of time, but wish you the very best for all your growth plans. And many thanks for joining us on Startup Street.
Thank you for having me. Thank you.
All right. Moving on. Byju's co-founder and director Divya Gokulnath has compared the EdTech giant's FY21 results to the blockbuster release of Brahmastra. Taking to LinkedIn, Gokulnath wrote, and I quote, "The second blockbuster release of this year after Brahmastra was Byju's financial results. I have not seen Brahmastra yet, but I do happen to know Byju's results because as its director, I was involved in its making," end of quote. She also added coverage of the EdTech major's financial results was sensationalized to focus only on the company's losses after it released its audited financials last week. And I quote again, "It's easy for forget in the flood of negative headlines that we are 18 months post FY21 and that Byju's has grown more than 4 times in this span, or that our widening losses in FY21 have been cut to half in FY22, end of quote," she added. Gokulnath also added that in the LinkedIn post that despite the 125 crore rupees loss they suffered every day in FY21, Byju's made 27 crores in revenue per day in FY22.
Well, on that note, we're going to head into a short break. But coming up next, B Capital recently announced the close of its Ascent Fund 2 at $250 million. A special conversation with Howard Morgan, the chairman and general partner at B Capital, on the company's investment strategy. Stay tuned. Welcome back. You're still with us on Startup Street. Now, B Capital is a multi-stage global investment firm with $6.5 billion in assets under management. The investment firm focuses on seed to late-stage growth investments, which are primarily in the enterprise, financial technology, and healthcare sectors. Founded in 2015, the company focuses on investments primarily in the US and Asia. In fact, it recently announced the close of its Ascent Fund 2 at $250 million. In India, B Capital has invested in companies like Meesho, Byju's, Khatabook, Fee, and Daily Hunt, to name a few. Joining us now to discuss the company's investment strategy is Howard Morgan, the chairman and general partner at B Capital. Howard, thank you so much for joining us on the show today, and welcome to India. Let me ask you first, you're a global investor. The pandemic gave the startup ecosystem a big boost with everyone turning to technology to resolve a whole host of issues. But investments in the past couple of months have slowed down, with global investors like SoftBank and Temasek rolling back on their India investment plans. So what's your take on the current investment environment? What's the kind of interest you're seeing for India?
Well, we think India is a great marketplace. We also think that the world got a little bit ahead of itself in pricing in 2021. And what we're seeing now is the ability to invest at much better prices. We want to invest in any fund over a long period of time, so we get the benefit of lower prices and higher prices. But especially in the startup area, in the Ascent area, it takes 8 or 10 years for a company to pay out. And so we don't really mind that the economy is slower or faster in any particular year. We just have to invest year in, year out in great early stage companies, and we're finding those all over the world, and in particular in India.
All right, so you did say early stage companies, so you primarily invest in them. What's the rationale behind investing in such an early stage? Which are the countries that excite you when it comes to startups? What's your investment mantra?
Well, the mantra is to find what we call rocket man or rocket woman founders in rocket spaces and rocket markets. And the markets in India are really growing dramatically. We see India as where China was maybe 8 or 10 years ago, with dramatic increase in the number of internet users, dramatic increase in disposable income. And it is a terrific market for creating business to business, and especially in the healthcare area where there's a huge need and demand for healthcare. That goes year in and year out. It doesn't really matter what the economy is like. People want to be healthy. They want to cure diseases if they have them. They want to live longer. All those are great areas. And we think both India and Indonesia in particular are great markets right now for these kind of early stage investments.
All right, so India and Indonesia on top of your radar there. But let's talk about your Ascent fund that you lead. It's primarily focused on US and Asia. It's a $250 million fund. So take us through the kind of investments you've already made. Where does India stand versus the other countries?
Well, right now we've done 3 investments, 2 in India that we've announced. One is Nectar.ai. Nectar is a company that does marketing technologies to try to help companies retain customers. We've done a company called Mojo Care, which we just announced, which is in the men's health space and helping digital health to help various things for male health. And in Indonesia, we've done a company called Finku, which is personal finance technology. In my previous career, I was very successful with a company called Mint. Finku is very much like that, but Indonesia, where there's the personal finances are just coming up. We've also done some we haven't yet announced, 1 or 2 in the sustainability area. I noticed that today the foreign minister talked about new investments in sustainability. We think that's also a great area to invest in, and we'll be continuing to do more of that. And also we think EdTech itself may be an area.
All right, so sustainability and EdTech is an area that you're also eyeing, which actually brings me to the next question. So you've already mentioned 2 of the sectors that you're interested in investing in, but what's currently exciting you about the Indian startup ecosystem in terms of various sectors? Where are you looking to put most of your money?
Well, we look to put most of it in healthcare and in enterprise software. The Indian technology teams are creating terrific enterprise SaaS companies. And we do that both in our growth funds, and we're looking for that type of thing in the early stage funds. Obviously, in the US, we're finding investments in the same spaces. So fintech, healthcare. We also think now in the future, education and in the sustainability space, mostly in software and SaaS. So they will be SaaS companies, enterprise SaaS companies, but their products will be focused on in the climate space in one area, one type of way or another.
All right. And your India investments include, like you mentioned, Mojo Care, but you've also got PharmEasy, Khaatabook, and the likes. Take us through how your portfolio companies are currently doing. Are you looking at any exits?
Well, we think we have a few companies that could exit when the markets open up. We have something like PharmEasy, for example. When the markets get better, that's one of those things that could exit. We are also in Byju's. Which you just talked about a little bit. We think there are a lot of those, but I don't think the markets will open up for the next 6 or 9 months. I think it's going to be a while before public exits are open again. So we're content to wait. These are great companies, and they have enough capital. We were very careful over the last 6 months to make sure that all of our companies had 24 to 36 months worth of capital to sustain them through whatever tough times there are in raising later stage capital. At the earlier stage, there's still plenty of capital around.
Absolutely. So another 6 to 8 months before we can see any exits. But you're also an investor in Byju. So what do you make of their recent earnings where they reported a loss of over 4,500 crore rupees? So what's your take on that?
Well, that loss was for 18 months ago or 15 months ago. So you really have to look at how they're doing today, and they're generating lots of revenues and starting to really come up the profitability curve. So I think it's a terrific company. And the problem when you announce earnings and it's so far back and the markets take a strong look at it, you say, okay, yeah, that was then. This is now. If you look at it for the last 3 months, it's a much better story.
All right. So if we take a look at it in the last 3 months, it is a much better story. All right, Howard, thank you so much for joining us on the show today. And we wish you all the best with your investment plans going forward.
Thank you very much. Glad to be on.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.